This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour. Asian stocks set to open lower with U.S. futures flat and oil extending declines as investors assess the limited progress from President Trump's summit with Vladimir Putin. The Trump team saying Russia's leader agreed to U.S. security guarantees for Ukraine, but many details of Friday's meeting remain unclear. Ukraine's president now heading to Washington for talks with U.S. and European leaders as Trump pressures him to accept a ceasefire deal by giving up territory to Russia.
And Avril, this is a setup across Asia right now ahead of the major market opens. We had, of course, the Japanese stock market reaching record highs. The Nikkei futures at the moment really not doing much, but this, of course, after the Japanese yen strengthened against the U.S. dollar last week. We had more optimism about the potential rate hike coming from the Bank of Japan, given the stronger figures that we encountered when it came to the latest GDP numbers. But it will really be about central banks this week. We do have an RBNZ rate decision across Asia as well. The projection is for a cut there. Central bankers around the world in focus. Take a look at how U.S. futures are setting up on this very consequential week as we get the symposium at Jackson Hole started later on Thursday. We will be watching Chair Powell's commentary when it comes to that potential rate cut coming in September. Take a look at futures right now pointing to the upside after we hit those record highs already last week. We came down from those record highs on the Friday session. We had some mixed data, including consumer sentiment under pressure, although we did see retail spending gaining ground. We will have more indications of where retail consumers are headed with those big retailers announcing earnings this week. But take a look at how crude is trading at the moment under a little bit of pressure for Brent at that $65 US level. We heard from President Trump talking about those tariffs on China being held off for now because he had threatened tariffs before on countries that supplied or bought Russian oil. But we saw some of those conversations, of course, coming from President Putin and President Trump during their Alaska summit. But, Avril, there have been very big questions about what was really achieved during those conversations when it comes to progress on that front. Were there any concessions made? We heard from the likes of Steve Witkoff. We heard from the likes of Secretary Marco Rubio. But even they had some conflicting details. So take a listen to what the Trump special envoy had to say.
We agreed to robust security guarantees that I would describe as game-changing. We didn't think that we were anywhere close to agreeing to Article 5 protection from the United States, in legislative enshrinement within the Russian Federation, not to go after any other territory when the peace deal is codified.
Now, Shery, as you say, we're still waiting for details of that Friday meeting. But what we do know is how the focus is shifting to Zelenskiy's meeting at the White House with Trump. We all know what happened the last time the two leaders were present in Washington. This time around, they have the European leaders in a show of support. They will also be at that meeting with Trump. We will be watching out for perhaps some progress. Does this move the needle towards some form of a ceasefire or peace deal arrangement? But to your point, still a lot unclear at this point. Have a listen.
It's crucial that Europe is as united now as it was at the very beginning, as it was in 2022, when the full-scale war began. This unity really helps to reach real peace, and it must stay strong. First, we have to stop the killings. Putin has many demands, but we do not know all of them.
For more, let's bring in Bloomberg senior editor Wendy Benjaminson in Washington for us. So, Wendy, a monumental meeting between Trump and Putin, but what's really come out of it? Unpack that for us, and what can we potentially look forward to when Zelenskiy is at the White House?
Well, Avril, we know very little really about what actually happened in the summit. As you know, the two leaders came out. They didn't take any questions. They said some progress had been made, and then they both went home. Now, yesterday, the day after they got back, Steve Witkoff played golf with the president. And then, as you saw, he came on the Sunday shows in the U.S. and said that there were these agreements reached, and it was very surprising to hear that there were solid agreements reached on security guarantees and that they would be codified by the Russian legislature. But at the exact same moment, Secretary of State Marco Rubio, who was also in the room with Witkoff, with Trump, with Putin, said something completely different. He said that it's up to Trump and it's up to Zelensky, and they could make these decisions without Zelensky present. And that nothing had been agreed to, and Trump will be the ultimate decider, as Rubio said. But we're left with as little clarity as we had on Friday. So this makes tomorrow's meeting, as you said, with Zelensky and the backup that he is bringing with him from most of Western Europe's leaders, makes that even more crucial. And I'm sure Zelensky is very nervous about what he's going to hear.
And European leaders as well. Do you expect there to be consensus on what Zelensky and European leaders want out of this summit?
I think there could very well be consensus between Zelensky and the European leaders. They've been meeting, as you saw. He was with Ursula von der Leyen of the European Commission. I think that group might have consensus. I think getting to consensus with Donald Trump and then getting Vladimir Putin to agree is going to be very, very difficult. I mean, as Donald Trump said, he expects Zelensky to make concessions. And at the moment, Zelensky and most of these European leaders have no interest in making concessions. I mean, they were the ones who were invaded, or Ukraine was.
Wendy, just based on the tone from Trump and Koll post-meeting, what is your sense of the pressure that Ukraine might be under to cede territory in the Donbas region?
I think he's under tremendous pressure to cede some territory somewhere. I don't think anyone, even some of the European leaders, were suggesting that might ultimately be what happens. There is no way, we don't think, for Putin to stop bombing the section unless he gets something out of it. Remember, both these leaders, Zelensky and Putin, have domestic political constituencies as well. And for Russia, they've been in this war for 4 years, and to come out with nothing is not going to be a good political look. But for Zelensky, coming out with reduced territory that his own country's constitution prohibits him giving up will also be very, very difficult.
What about pressure on President Trump? I mean, it was only a couple of weeks ago when he kept giving these new deadlines for President Putin to follow when it comes to a truce with Ukraine. How much face-saving does he need to do now?
Well, face-saving doesn't seem to be a problem for President Trump, to be honest. I think he'll just say that this is the new, he doesn't seem to be under any pressure. He seems to he wants to solve this. He did campaign on solving this on day one, as he said on the campaign trail. It's now been, 8 months that he's been in the presidency and has yet to solve it. So he's under some pressure, but he himself seems to just roll with each development and set a new deadline and move the markers back and work like that. Yeah,
the idea was that we were going to get a truce right away after he took office. But we'll continue to watch the latest developments with Wendy Benjaminson there, Bloomberg senior editor, on those talks with Ukraine. President Trump also saying that he will hold off raising tariffs on Chinese goods over Beijing's purchases of Russian oil, citing progress made by Vladimir Putin toward evading the war in Ukraine. Let's bring in our China correspondent, Min Lo. So what do we know about these tariff threats and the sort of withholding of new levies given this supposed progress on these negotiations?
Yeah, it certainly buys the U.S. and China more time to discuss this broader trade agreement, right? Because any secondary tariffs on China for its purchase of Russian oil will most likely risk breaking that rather fragile sort of trade truce that both sides had managed to extend just last week, because we know that the buying of Russian oil is something that China will likely not give up on, because China has repeatedly said that it is crucial for its energy security security. It has said that it will continue to defend its energy sovereignty, and not to mention the close ties, personal ties between President Xi and Putin as well. Now, of course, there are still a lot of other issues on the table for U.S. and China to discuss, right? The usual things from fentanyl to the tech curbs to the flow of rare earths. We know, for example, that Scott Bessent has said that he's going to meet with his Chinese counterparts within the next 2 or 3 months. And he also said when it comes to lowering tariffs on China, it really depends on, for example, the fentanyl, the flow of fentanyl. That's something that he said the U.S. will want to wait months, quarters, or even years to monitor. So the prospect of further lowering tariffs is still quite difficult, but at least Trump's latest comments does take the pressure off a little bit, especially given that we know Putin is about to visit China sometime in early September to go for that military parade that Beijing will be hosting.
Min Min, in the meantime, we know how India has also come under pressure because of its purchases of Russian energy. We know how there have been toying relations at the same time between India and China. The Foreign Minister Wang Yi visiting India. What's on his agenda?
Yeah, it is a 3-day visit, and he is expected to meet with senior Indian officials, including the External Affairs Minister, the National Security Advisor. He's expected to meet with Prime Minister Modi as well tomorrow. That's ahead of Modi's planned trip to China later this month to attend the Shanghai Cooperation Organization Summit in Tianjin. So this is the latest sign of the thaw in China-India relations. Officially, this trip is meant to discuss the de-escalation of the border dispute between China and India. We know there are still about 50 to 60,000 troops stationed at each side of the border, according to estimates. And sources are saying that both sides are looking to potentially reduce the number of troops stationed at the border. That would be a very significant development towards this restoration of trust between the two sides. We understand that both sides might want to resume border trade as well. There used to be these 3 trading points along that 3,500 kilometers disputed border. It's a small amount of trade, but both sides looking to maybe resume those trading posts that had been closed during COVID, and that coincided with the deterioration of China-Indian relations after the deadly border dispute in 2020. And this comes as both sides have been looking to resume direct flights with each other. India has started giving out tourist visas to Chinese nationals as well. So we could be seeing this formation of China-Indian axis here as both sides look to counter the tariffs from the U.S.
Yeah, how much have things changed in the last few years, right? I mean, these two countries needing each other, especially, as you mentioned, being hit by tariffs from Washington, especially India, 50% tariffs? That was pretty surprising. Can we expect any progress on that front?
So initially, U.S. and India were planning to have trade talks, a 6th round of trade negotiation actually next week. But local media is now reporting that the trade talks could be rescheduled. And of course, this is coming as the U.S. had doubled the amount of tariffs on India for its purchases of Russian oil. It would be interesting to see, given Trump's latest comments about holding off those tariffs on China, given the progress that Trump has made with Putin, whether or not the U.S. will actually perhaps retract or lower down the tariffs that they have imposed on India as well. But of course, the rescheduling of that meeting doesn't really bode well for the continued talks between U.S. and India. We know that Modi has been pushing back hard against the accusation around its purchase of Indian oil, saying that it's justified and saying that double standards had been imposed because the EU and U.S. both have continued to trade with Russia as well on energy products or other products as well, like chemicals and the like. And so we'll have to see what goes on next and whether both sides will be able to work together. We know the U.S. have been pushing for more access into India's agricultural and dairy sector. So perhaps with some concessions from India, maybe we could see those tariffs lowered further down.
Min Min, thank you so much. Bloomberg's China correspondent Min Min Lo for us. Coming up on the Asia Trade, Westpac joins us to preview key economic data coming out of Asia this week. Monex Group discusses how Jackson Hole may influence the BOJ's rate path. Plus, we talk about Australia's aerospace ambitions with Gilmour Space Technologies. Much more ahead. This is Bloomberg. Here's a quick look at the week ahead. Australia's Treasurer Jim Chalmers leads a 3-day economic reform roundtable beginning Tuesday with business groups, trade unions and economists discussing ways to boost productivity. Japan will release its July trade numbers on Wednesday ahead of the national CPI print later in the week. On Thursday, the Kansas City Fed's annual Economic Policy Symposium begins in Jackson Hole with Chair Jay Powell's speech to be closely watched for hints on a possible September rate cut. Lots to discuss. Let's bring in Fenner, Head of Business and Industry Economics at Westpac, for some analysis. So, Sian, good to see you. There's a lot to unpack for the week ahead, but maybe let's start with the Federal Reserve. We got data in the past week on consumer producer inflation, giving us some mixed signals. Retail sales looking resilient. What is the data telling you about the tariff pass-through and what this is going to mean for the Fed?
I think at the moment what the data is showing is that we've got it getting a little bit of signs, some signs that the tariffs are being passed through, but it's fairly mixed at the moment. But what we've got to remember is that really we're getting a doubling in tariff, the effect of tariffs coming into play from August. So we're expecting that we'll start seeing more of the flow through of tariffs into the CPI data going ahead.
What are you watching from Jackson Hole and potentially how much clues we will get from Jay Powell on the Fed's path ahead?
Yeah, so, I mean, obviously, we still think that inflation is actually the main concern for the Fed, but we have had the recent labour market data, which was a bit softer. It looks like the employment actually is growing at a rate a bit below this sort of break even. So what we'll really be looking for is actually how Powell is actually describing the environment where there's still upside risk to inflation, but there are some signs that labour market conditions are softening and how he's actually going to be balancing that going forward.
So do you expect a cut in September?
Yeah, so we're still looking for a 25 basis point cut. So even though we've got that upside risk to inflation, that doesn't preclude an interest rate cut. But going forward, that's where we're a lot more cautious than, say, the markets. We think that those inflation concerns, particularly just seeing how they actually play out, how much businesses pass them on, even actually how much actually exporters to the US are actually absorbing that. Until that's sort of become a little bit more certain, we think they're going to remain a little bit more on the cautious side, a little bit more waiting to see the data. And so we're only looking for a further 25 basis points by the end of the year.
Does that give more leeway for Asian central banks also to move? We're expecting a decision from the RBNZ this week as well.
Yeah, so we do think the economic conditions are going to be a lot more challenging going ahead in the second half. Obviously, we've had that front loading of exports that had been supportive. That's unwinding. So we do see the central banks, with inflation remaining quite tame, that they will be able to cut interest rates a little bit more. The fact that the Fed will be reducing rates by, in our view, only 50 basis points, means it's not going to be an aggressive rate cut. They have already cut rates already, but they do have space to provide more support for domestic demand.
What about the path of the BOJ? We're watching out for the national CPI numbers at the end of the week. We also heard last week Besson sort of talking about how the BOJ is behind the curve. I mean, what realistically are you expecting from the Japanese central bank's path?
Well, for there, we still think they're going to be fairly cautious. I mean, inflation has risen substantially. A lot of that's rice prices, so it's more of a supply-side shock. We think they're still going to be wanting to see what the demand impacts are. So as we're going forward, exactly profitability, how much, they actually have room to raise rates. Our view is that they're going to probably hold off until next year, March. But that could be brought forward. We've seen quite sort of strong wages growth and, the summer bonuses have been quite strong. So we may see that December, but we're not looking to anything in the immediate future.
Economic data out of China, though, has been pretty disappointing. What are we expecting from the loan prime rates and more broadly where the PBOC goes from here?
Yeah, so we're probably going to see maybe another sort of 10 basis points on the loan prime rate, but we largely don't think they're going to be doing a lot more. It's probably going to be a bit more on the quasi-fiscal. I mean, you're right, activity has been weak. July was sort of a very sort of soggy number across the board. Obviously, there's not going to be the boon from exports going forward, so we do need more fiscal support coming forward. That's probably going to be an infrastructure. We've seen the announcement of the hydropower for Tibet, but we also want to be looking for a lot more on sort of providing that support to consumers, particularly on sort of the services side, if they're going to achieve the 4.6 growth that we're expecting next year. We think the 5% is pretty much a done deal, but it's going forward how they can support the economy.
Sian, as we see broad slowing in some of these activity indicators out of China, what are you seeing in other parts of Asia, including Southeast Asian countries? Are you already seeing that sign of payback creeping into the economies?
Yeah, we're seeing a little bit of signs. I think actually where we're probably seeing it more is on the container trade volumes. That's showing that, the demand, particularly to the US, is weakening. And we'd expect to see more of that going forward. It's going to be quite tricky sort of trying to unwind the mess. You're going to get that payback from that sugar rush of front loading, but then trying to sort of unwind, figure out how much of this is actually, weaker US demand or actually trade flows in general sort of easing. It's going to be probably a little bit messy for the time being.
Fenner, good to have you with us to really walk us through the messiness right now that we're seeing in broader global economic and trade data. Head of Business and Industry Economics at Westpac. We have more ahead. This is Bloomberg.
You're watching the Asia Trade, and Shery, as we've been just discussing with our guests, is about unpacking some of these tariff developments and the impact on economies. So it's really quite remarkable. If you take a look at emerging markets, amid the volatility the whole of this year, it's actually managed on the MSCI Asia or EM gauge to gain about 20% so far this year. And a lot of this has been driven by the top contributors, and this includes some of these AI plays, TSMC, right, and Tencent, Alibaba, Samsung. We also have some analysis on the terminal, how investors are predicting that tech spending will drive returns for years to come. So really underpinning what we're seeing in EMs, this AI craze that's been ongoing, Shery.
And also perhaps the optimism about potentially more stimulus coming from China, right? I mean, EMs are pinned so much to Chinese economic growth, and that has disappointed. So will policymakers come out with more stimulus measures? In the meantime, we've been watching the dollar bond markets in EMs as well, because that's another area where investors have found some value and some opportunities, especially a country that we don't really talk about, where I come from. Bolivia dollar bonds have been among the top performers in emerging markets this year, and really a lot to do with the election that's ongoing right now. The polls have closed. We are awaiting the results, but the expectation that perhaps two pro-business candidates are actually taking the lead, and we could see a change finally after the ruling party, MAS, held really the office for almost without interruption since 2006, that could change to a more business-friendly environment has sent dollar bonds from Bolivia to highs that we haven't seen in years. And of course, we have seen the unrest in this country. My parents standing in line for hours in order to get fuel at the gas station has been a really common sight across the country. So we'll continue to watch the results in this South American economy. We have more ahead. This is Bloomberg.
Let's take a look at commodity prices against the backdrop of that meeting on Friday between Trump and Putin. The focus now shifting to Zelenskiy being at the White House to meet the U.S. president, with other European leaders also expected to be present. Oil is slipping for a second session, or at least is expected to, based on perhaps what this means for the Russian oil supplies in the market. For more analysis, we're joined by Matthew Sussex, visiting fellow at Australian National University Strategic and Defence Studies Centre. So, Matthew, it's really about what was expected. Maybe there were some lower expectations going into the meeting. But first off, what is your read on the extent in which this pushes us closer to sort of ceasefire or a peace deal?
Yeah, well, look, I'm not quite sure it pushes us any closer to a ceasefire or a peace. what's been insisted on by the Russians and which the Trump administration seems to have endorsed is to move straight to a peace plan rather than a sort of graduated ceasefire. And that's what the Ukrainians and the Europeans prefer. And in addition to that, of course, the plan that's been presented is rather a sort of maximalist, Russia-friendly one, which involves Ukraine giving up enormous amounts of territory that it currently controls to Russia in exchange for a sort of fix of the conflict lines where they are now. So there's much that needs to be decided about, who gets to secure Ukraine, what security guarantees it has, and so on, before I think, Zelenskiy can have any comfort about the prospects of peace.
What is your read into the extent in which European leaders being present at this upcoming meeting between Trump and Zelenskiy will make as a show of support and perhaps pushing back against some of that pressure?
Yes, look, I think it's extremely important. What they want to ensure is that Zelenskiy isn't ambushed like he was the last time he was in the White House, or at least the first time with J.D. Vance and Donald Trump, effectively saying he was a dictator and ungrateful for American help. And this is quite the roll call of senior European leaders. We have Ursula von der Leyen, we have Mark Rutte, the NATO head, as well as numerous powerful European leaders, Keir Starmer, Emmanuel Macron, and Friedrich Merz. And I think, in addition to providing cover for Zelensky, they are going to want to communicate very much that Europe has skin in the game, and that it doesn't want to see the future of European security decided without it at the table.
Yeah. Talk to us through that skin in the game. How much at stake is there in these negotiations for Europe?
Well, look, there's an enormous amount at stake because if, in fact, the Russians get their way and a peace deal is forced on Ukraine, then it first of all sends the message that conquest pays off. It second sends the message that, US security alliance credibility is kind of low. I think the Europeans recognize that they're going to probably have to take the lead anyway in securing a post-conflict Ukraine. But ultimately, it means that, the United States, which previously, of course, has upheld European security, has been making noises since the Trump administration took office that it may not be as committed to upholding some of its treaty obligations than previously. And this is very worrying for the Europeans. And I think they want to make sure, if at all possible, that Trump realizes that the security of the United States depends also a fair bit on what happens in Europe.
So where's the circuit breaker in these negotiations? It seems that President Putin is not backing down on his territorial demands. It seems that President Zelensky is also not ready to give up. The Europeans are backing him, of course. So where can you expect to see some level of compromise for a move towards peace?
Well, look, at the moment, I'm not sure that really there's much incentive on either side to move towards peace. Putin thinks that he's winning. And that he has, an unending stream of cannon fodder to throw at the conflict, and something that he's demonstrated he's been quite prepared to do for months now. Whereas for the Ukrainians, the prospect of taking a loser's peace is one where, not only would they have to cede large amounts of land where they have, coal, mineral deposits and give that to the Russians, but in addition, this is their homeland that they're fighting for. So there's every incentive to keep going and not accept something that's ultimately humiliating to them when they've been fighting so valiantly for 3.5 years. And you could say even longer, ever since 2014, since the Russian takeover of Crimea.
So, Matthew, would you say that your assessment is Putin at this stage is unlikely to want any form of a peace agreement and that these negotiations are really about buying time?
Yeah, I think that's absolutely correct. I think Putin wants to delay and kick the can down the road as long as possible. He's certainly managed to dodge the prospect of American sanctions and secondary sanctions, which Trump has walked back. And he's reverted to a fairly familiar refrain about needing 2 weeks before he thinks about those again. And that, of course, gives the Russian armed forces time to take more territory in Ukraine so that they can come to the negotiating table and say, look, ultimately it is inexorable. Russia will win eventually. We may as well have a peace now that reflects the types of gains we will make down the track.
Where are domestic politics in all of this? Is there any pressure for either President Putin, for President Zelenskiy, or even President Trump in the U.S. to reach an agreement and truce sooner rather than later?
Yeah, it's really interesting to see American attitudes, in particular, hardening, back in support of Ukraine. Even if you look at the Republicans, fully 84% of them support more assistance for Ukraine and don't believe that Vladimir Putin is someone whose word should be trusted. Whereas there's potentially a little bit of pressure on Trump effectively, the way that he controls the base, the Republican base, as well as, Congress and the Senate, means that I think there's very little pressure on him. Zelenskiy has some pressure, I think, to bring the conflict to an end. But by the same token, there's just as many Ukrainians who want to fight on and would, be absolutely outraged with the prospect that Zelenskiy could trade large swathes of Ukraine to Russia. It's sort of bit both ways in that respect. And in Russia itself, I think there's a general war weariness. But ultimately, the conflict hasn't really touched the types of places with real political influence in Russia, and that means Moscow and St. Petersburg. And if daily life continues on as relatively normal there, then there's very little incentive for the public to get upset about it, particularly since if they were to protest against the war, they can be sentenced to up to 15 years in jail simply for doing so. So I think domestic politics plays a role, but is not necessarily going to be decisive for any of those three leaders at the moment.
What about the role that potentially China and India could play in exerting some form of pressure on Russia, given how they could be hit by secondary levies? What's the calculus there?
Yeah, well, I think India, with some justification, feels pretty aggrieved at the way it's been treated by the Trump administration, which previous American governments have spent on both sides of the aisle, have spent about 25 years of patient diplomacy, building up relations with New Delhi. I think India probably, even though it is a major arms client and a major energy purchaser from Russia, its amount of leverage over Putin is kind of limited. It could make the right noises, but then it would have to have the right incentives. And I think there is a calculation in New Delhi that Trump is probably not prepared to go to 500% tariffs in order to basically force India to buy American energy rather than Russian energy. And I think that's the key there. On China's side, Xi Jinping, I think, probably, wins whatever happens, and has an incentive really to see Russia as, on the front foot, but nonetheless weakening itself. The United States distracted, and Europe distracted as well. So whereas I think Xi Jinping has been quite strong on things like, nuclear weapons. He issued a peace plan a while ago that stipulated quite clearly that there shouldn't be nuclear use. His incentives are kind of limited as well.
Yeah, and President Trump now saying that he will hold off on raising tariffs on Chinese goods for buying Russian oil, given the progress with President Putin. But we'll continue to watch that as Matthew Sussex there has joined us with the latest views. Thank you so much for that, visiting fellow at Australian National University with his views on, of course, the Ukraine conflict. We do have more ahead. This is Bloomberg. Take a look at how Japanese assets are trading. Of course, we are watching those assets that will be trading at the top of the hour. The Nikkei futures at the moment gaining ground after hitting record highs last week. We had more robust GDP numbers signaling potential rate hike coming from the Bank of Japan that sent the Japanese yen higher against the U.S. dollar. And you can see right there holding at that 147 level as well. We do have inflation numbers out of Japan this week, so do watch out for the CPI numbers on Friday. Of course, it's a very consequential week already as we have Jackson Hole later this week, and we are expecting Chair Powell also to speak about Fed policy. With us now is Jesper Koll, expert director of Monex Group, with his take on what's happening here in Japan, of course.
おはようございます。
おはようございます。お久しぶりです。It's a very long time since I saw you last. But has anything changed since I last saw you? We're still speculating about the next rate hike to come from the BOJ. Have things changed now that we have hotter GDP numbers, hotter eco data?
I think the key issue is that the corporate metabolism here, continues to actually improve. And you're seeing it. I mean, not a week goes by when you don't have, a merger. Lots of record mergers and acquisitions in Japan. You've got MBOs, management buyouts. And then very, very importantly, capital investment expenditure continues to be revised up. And it's very interesting. Japan basically for 30 years was playing defensive. They cleaned up their balance sheets. They were very focused on cutting costs. Now, over the last 3 years, and still accelerating, which is what's exciting, you've got CEOs actually investing in the future of their business. So that's what's exciting about it. GDP, you obviously have the household sector. And Mrs. Watanabe continues to be hurt by rising inflation.
What is more important in Japan right now? Capital spending by big businesses or private spending?
The key issue is in financial markets, no question, it's all about the corporate sector. Yes, it'd be nice, but you're not going to get it. It would be nice if you get strong consumer spending, but given that 1 in 3 Japanese are now over the age of 70, are living off pension assets, and pension assets here, as you know, your pension income is actually not linked to inflation. So if consumer prices rise by 3%, pension payouts actually are only increasing by about 1.7%. So the consumer as a real turbocharge for economic growth is not going to happen. But for investors...
Right. But isn't that what you wanted? Virtuous cycle of inflation demand happening here within the economy?
So it's very interesting that you say that, because you do see that demand for services is actually growing very nicely. And I do think that, U.S. Secretary Scott Bessent is absolutely correct. I do think that the Bank of Japan is behind the curve because you now have had basically 40 months of the CPI, the Consumer Price Index, running higher than the 2% target. And Japan is the only country in the world with negative real interest rates.
Yes, but as we've been hearing, though, from the BOJ recently, even though the data seems to back the case for that hike, they've been waiting for clearer assessment of the tariff impact. How is that shifting your calculus of when realistically we might see the BOJ moving?
Look, I think it's very clear. We now have some transparency on the tariffs. We obviously still need to monitor the exact impact. But, the clarity is there. And for all intents and purposes, a new shock coming into the system from, policy at this point in time seems to be pretty safe. So I think that the market is actually right that come September, October, we should be able to get another 25 basis points, if not 50 basis points.
What about the political uncertainty in the country at the moment, and how that potentially informs the amount of fiscal spending we can expect?
So it's interesting, the Ministry of the fact that politics, that Mr. Ishiba is in a very weak spot and needs to sort of, make sure that the LDP still supports him, actually it empowers the bureaucrats. And the bureaucrats will always be fiscally conservative. I know we're all aware that there are some calls, to maybe cut the consumption tax, but I think for all intents and purposes, precisely because politics is weak, Japan does not have a strong man. As a result of that, the bureaucrats rule, which means something dramatic happening on fiscal policy is very, very unlikely.
So let's put domestic politics and domestic economy aside. How much does the BOJ calculus also depend on what the Fed does? Because especially when it comes to the weakness and strength of the Japanese yen, and we have Jackson Hole, of course, happening this week.
Yeah. Look, you're exactly right. It's always going to be, this communication. The communication, by the way, is excellent, right? It's very...
Whose communication? The BOJ or the Fed?
No, the communication between the Bank of Japan and the Federal Reserve, right? This is something that's often forgotten. There's all this kabuki going on at the high stage, but the reality of, regular updates, regular communications, all the way from Jake Powell to Governor Ueda, as well as all the staff underneath, that U.S.-Japan relations in terms of communication and coordination on monetary policy is excellent. Is absolutely second to none here.
Is that why the 147 level of the Japanese yen, and it's been very range bound, seems to be pretty stable at the moment, not like last year?
Right. No, and this you make the important point. I mean, the important point is that actually you are almost in a sweet spot, where, you're around 145, 150, nobody gets hurt, everybody makes a little bit of money. And for all intents and purposes, yes, there's a lot of talk about the Federal Reserve, dramatic things happening there, but from a Bank of Japan's perspective, right, you want to actually wait to see what the Federal Reserve is actually going to be up to. And once the Federal Reserve starts cutting interest rates, that is going to have an impact on the currency. Now, ironically, if the yen were to start to strengthen, let's say we get to 130, that would actually be very positive for Mr. and Mrs. Watanabe, because prices would start to fall, food prices would start to fall, so all of a sudden the real purchasing power of Mr. and Mrs. Watanabe is going to start to increase.
130, though, seems a long way from here. I mean, we've been talking about 130 for the past year, I think. Yes, Koll. Good to have you with us. I'll get you back next time to talk about yen levels. Expert Director, Monex Group, of course. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. And, of course, you can watch us live. And TV Go is also your function. This is Bloomberg. We have more big tech earnings in China this week, with Xiaomi set to report tomorrow. Alibaba, another key name to watch after weaker results from e-commerce peers like JD.com. But let's get more with our Asia tech correspondent Annabelle Drulers in Hong Kong. Annabelle, so should we get started with perhaps Xiaomi and what we're expecting?
Yeah, we can certainly start there. I mean, it's going to be really one of the key results that are going to be tracked this week. Xiaomi, of course, it's a company that has three different sort of pillars to its business model. So on the one hand, you've got the household appliances. That segment is seen posting strong growth. Overall headline, actually, I should note as well, we're looking at sales growth of around 30% on the year. But yes, household appliances, they should see strong sales. You've still got those trade-in programs, those household subsidies ongoing. Phones as well, that's another key pillar, of course, and Bloomberg Intelligence is saying that they're still going to see growth around the mid-single digits. But here you're really looking at what has been one of the most closely tracked areas of Xiaomi's business, and this is the newest one as well, EVs. And EVs are continuing to contribute more and more to the bottom line. In fact, our Bloomberg Intelligence team, in a separate report, they're saying that by next year, Xiaomi could be outselling Tesla in mainland China. The big question, of course, is it not only how much they contribute to the bottom line, but also as they scale up the business and you get those cost benefits that come in, all those cost savings, economies of scale, how much as well can that improve the margin? And Bloomberg Intelligence is saying that could actually have increased the growth reading to 22.5%. So, yes, Xiaomi's results are due Tuesday, and again, will be very closely watched.
Yeah, Belle, the other one that we're closely watching after Tencent, JD, is Alibaba this week. What are the focus points here?
Well, I think you mentioned JD.com there, and that was the reporting last week, of course. So we're kind of halfway through, really, the big eight earnings from China's tech space, and they've been pretty mixed so far. But again, Tencent versus JD.com, you're kind of seeing that divergence continue. Really where the concern is for Alibaba is in the e-commerce part and the food delivery business in particular, because we've seen very stiff competition in this space from the likes of JD.com, Meituan as well, Alibaba. All of those are trying to vie not only to maintain their market share, hold on to it, also to try and expand it as well, and that is certainly having a big impact on its margins. You can see here that Alibaba's stock year to date, I mean, it is still doing better than the likes of JD.com that's already slumped more than 11%, but that is also the AI story. And again, what they say, and this would be very interesting, you've got Alibaba Cloud, it's been a really key growth driver for the business, but how they're going with those efforts to even reach things like artificial general intelligence, for instance, that's something that they spoke about earlier this year.
And just quickly, because I'm really curious, there was that robots humanoids race in China. Who won?
Yeah, I mean, this is, I mean, it's certainly incredible, really, although it almost becomes sort of expected in China these days that you can have sort of a humanoids game. But here you can see, for instance, this event that took place over the weekend. So it's sort of a games. There's 26 medals, and then it was this race that we saw as well. Who could win out in the 1,500-meter humanoid race? Actually, Unitree took the top prize. Unitree took the top prize in another race event as well. It was really one of the big standouts on the day. But lots of different events in focus. You can see there, for instance, we saw some of the football. You can see other jumping events as well, or table tennis. I mean, there was a lot going on, but we can get more details on that ahead, of course. And a very special episode coming up.
We'll never get tired of robots just jumping around. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, it's a big week for central bankers. April, as we have Jackson Hole starting on Thursday, we are expecting Chair Powell to speak about the Fed's policy framework. And of course, perhaps any hints of a policy rate cut coming in September. And of course, a backdrop of geopolitical tensions, as well as we continue to see those conversations between President Trump and President Zelenskiy.
That's right, with the EU leaders now in the mix at the White House as a show of support. That's only one summit that we'll be keeping a really close watch on. Will this move the needle towards some form of peace in Ukraine, Shery?
And in the meantime, of course, we're waiting. The Japanese market opens after stocks already touched that record high on the Friday session. We had some positive data, not to mention that we were watching the Japanese yen very closely as well. Gains against the U.S. dollar last week. We had the GDP numbers expanding faster than expected, and those robust numbers leading to expectations that perhaps the Bank of Japan will hike rates soon. We continue to watch those large caps because they led the gains, perhaps an indication that more foreign investors are jumping into the Japanese markets, as the Topix is also gaining 0.33% and the Nikkei is also gaining 0.2%, extending those gains from last week. It was a different story in the Korean market. Take a look at how the Kospi and the Kosdaq are coming online because Korean stocks were under pressure. The Korean won also underperformed its Asian peers. A lot of really concerns about the trade landscape right now as we have the July trade figure sort of surprising to the downside. You can see the Korean won holding at that 13.89 level, but the Kospi already down 0.7% at the open, April.
Yeah, and Shery, speaking of trade, it was also interesting following the meeting between Trump and Putin. There was this talk about maybe they don't need to raise tariffs on China just yet. So that's another dynamic that we'll be watching as these world leaders meeting gets underway at the White House. In the meantime, keeping close watch on Aussie dollar as well. And the open in Australia, we are looking quite soft at the start of this trade. trading week. It is a big one for earnings. But aside from that, taking a look at the pressure that's coming on the U.S. 2-year treasuries. This is, of course, following on from a week where there's been immense volatility and conflicting signals on how tariffs are playing out in inflation, what you're seeing in consumer inflation versus producer inflation. Retail sales did look pretty robust, but as you say, that signal from Jackson Hole will be absolutely key to watch as well. Seeing also the continued slide in oil prices as we continue to track these geopolitical developments, Shery.
Here, let's bring in Jung and Yoon, founder and CEO at Fibonacci Asset Management Global, in order to get some views of where the markets are headed this week. Jung, and always good to have you with us at a very consequential Jackson Hole week. Is there anything that you're watching in particular for direction on where the markets go from here?
So there's like 99% probability that Fed will cut in September. However, a few points we want to watch until we finalize our verdict. The labor data came soft, and that kind of spurred the expectation the Fed will cut sooner. And the inflation remaining 2.7%. However, if you look at the core inflation, it's still at 3%. Also, the talk about the tariff is the inflationary impact of the tariff really reflected in the market? I don't think so, because the companies tend to have some inventory builds up. So we haven't seen the full impact of the tariff yet. And also, the labor market could show surprising resilience in the next month. In that case, the Fed is data dependent, and therefore the likelihood of the September rate cut could be derailed. However, there's a very high chance that we'll get a cut in September.
That's the issue with markets, right? When something is so well priced in, the probability of disappointment is so far high. And at a time when we have already seen incredible rallies, not only in the U.S., but also in European markets reaching record highs, at a time when valuations are so high, what are the chances that we might see disappointment coming from the Fed that could derail this rally?
So the data is showing a gradual progress toward the 2% target the Fed wants. However, the data isn't that clear yet. If the labor market data comes in stronger than expected, if we have a surprising uptick in the inflation, that can surely derail the market. Already, participants are kind of expecting there to be a small cap or mid cap rally, and the stock price is moving ahead. However, when the disappointment kicks in, we will see a quite disruptive impact in the market. However, in this case, the September cut is probably very high. It's just that when everybody's cheerleading about the future, we know that from the experience, bad things can happen.
Yeah, and we're also watching tariff developments. The situation continues to evolve, even though things have settled down quite a bit when it comes to sectoral tariffs. What is your assessment of what we might see on chips tariffs and the impact on markets such as Taiwan or South Korea?
So the chips tariff I think, is a signal that Trump is sending to the chip makers that they should bring more jobs to the U.S., they should build more factories in the U.S. I think if you can communicate that you have the commitment to increase expenditures or investment in the U.S., that tariff can be sort of deflected. However, if you don't send a clear signal, then there will be more harsh comments coming in. I don't think the tariff will actually kick in. However, if the companies are sort of sluggish or do not keep up the pace with Trump's expectation, there will be some repercussion.
So what extent do you think that's going to inform the further unlocking of gains we've seen in some of these chip-making stocks, SK Hynix, Samsung, and the extent in which we can see Samsung catching up to its rival?
So earlier, we thought this will be the year when Samsung catch up with SK Hynix. However, the Q2 operating profit came in with a very disappointing figure. It was lower by 56% YY. And the gap between Samsung and SK Hynix is not narrowing, it's actually widening. However, Samsung has made a significant commitment to U.S., is investing more than $40 billion in the U.S., while SK Hynix is only investing 1/10 of that. So, U.S. perspective, Samsung is more favorable companies, and SK Hynix has been somewhat slow when it comes to making commitment to invest in the United States. We'll have to see how that will impact the company in the future.
When we talk about South Korea, we tend to focus on, of course, the tech sector. But I love how in the notes that you sent us before we came on the air, you actually talk about K-pop Demon Hunters. Of course, very popular on Netflix right now, that animation that I have to admit I watched myself. Is there anything else in South Korea right now that's really catching foreigners' attention that we are expecting to see more upside, given, of course, K-content being so widely accepted these days?
So any companies that can monetize this K-wave will definitely post a good profit in the second half. We're talking about food companies like Samyang Food, also cosmetic companies like Cosmex, or any other companies that can ride on the K-pop rally will do very well in the future.
So let's expand from South Korea because, of course, we're also watching Japanese stocks, which have been at record highs already. Is there any more leeway for gains in this market at a time when we're also expecting potentially a BOJ rate hike?
So from BOJ's perspective, any sign or gesture to weaken Japanese yen is a big no, right? Because it can definitely upset U.S. counterparty. However, the economic fundamentals are doing great. Price seems to be a bit stabilizing, although the pressure is on. So BOJ will probably hike. However, it will probably also leave a hint that it will be very conservative when it comes to making that decision. If there is a signal from BOJ that they may postpone future rate hikes, then that's obviously a good plus for the Japanese exporters.
Jung, as you alluded to, one of the key things that has fueled the Japanese stock market run is the corporate reform governance efforts. That's something we're seeing in South Korea as well. But at the same time, there is that regulatory backdrop or tax plan backdrop to contend with. What is your assessment of where we go from here? Is this a headwind for South Korean markets?
So, before the election, we had a remarkable first half in Kospi. Kospi was one of the best performing index of the world. And the new president promised something called Kospi at 5,000 level. However, after he won the election, the ruling party suggested that now they're hiking taxes on investment in equities, which is very contradicting. So now the investors are kind of curious, where's the true intention of Lee Jae-myung's government lies? Was Kospi 5,000 level just a slogan to win power, or do they actually mean it? I think although the market price has come back after we had that 4% drop in one day, the scars remain, and I think investors overall are very cautious when it comes to approaching Korea market.
Adding to potential headwinds, Jung-in, thank you so much for your insights. Jung-in Yoon is CEO at Fibonacci Asset Management Global. Now, as we've been discussing earlier on the program, it's also a big week for earnings out of Australia. Let's take a look at some of the stocks we're having in our sights in focus. Lend-Lease for one, full-year net income missing estimate, seeing a bit of upside. That said, we also are keeping tabs on some of the big lenders. National Australia Bank profits held steady against the backdrop of business loan growth. So you're seeing that gain of 1+%. BlueScope Steel, that's another stock that we're watching in the session today. Some downside to almost 2.5%. Its earnings full year were weighed down by the global steel capacity glut. Shery.
And Avril, we're also watching some of those crypto stocks, especially here in Japan, because we had seen reporting from the Nikkei that Japan's financial services agency is set to approve the first yen-denominated stablecoin this month. FSA now saying that they will register stablecoin issuer JPYC as a money transfer business. That, according to the Nikkei, you can see a little bit of a mixed picture right there with Metaplanet down, but everything else is right now gaining ground as we continue to watch the likes of these digital asset holders like Gilmour, Remix Point as well. Japanese and other Asian crypto shares also, of course, we saw those gains in the previous session after the U.S. passed legislation clearing the way for broader stablecoin use back in July. We have more ahead on the Asia trade. This is Bloomberg.
First, we must have strong security guarantees to protect both Ukraine and Europe's vital security interests. Ukraine must be able to uphold its sovereignty and its territorial integrity. There can be no limitations on Ukrainian armed forces, be it cooperation with or other third countries or assistance from other third countries. No limitations for the Ukrainian armed forces.
It's crucial that Europe is as united now as it was at the very beginning, as it was in 2022 when the full-scale war began. This unity really helps to reach real peace, and it must stay strong. First, we have to stop the killings. Putin has many demands, but we do not know all of them.
Ukrainian President Volodymyr Zelenskiy and EU Commission President Ursula von der Leyen speaking before they head to Washington for a meeting with President Trump. Now, U.S. Special Envoy Steve Witkoff says President Trump and Russia's Vladimir Putin agreed at their Friday summit in Alaska that the U.S. will be able to offer Kyiv security guarantees.
We agreed to robust security guarantees that I would describe as game-changing. We didn't think that we were anywhere close to agreeing to Article 5 protection from the United States, in legislative enshrinement within the Russian Federation, not to go after any other territory when the peace deal is codified.
Bloomberg's Michael Heath joins us now for more. So, Mike, as seems to be typical these days, we get these headlines and then we wait for details or filling in of the blanks. What were your main takeaways from this meeting over the weekend? What are you watching out for next?
Hi, April. Yeah, I mean, look, the stuff that Steve Witkoff mentioned there, the Article 5 and the security it's probably about the only positive that you can take away from this. I mean, excuse me. President Trump said, you know, he's going into this summit or this meeting, and he'll be demanding a ceasefire, and if Russia doesn't agree to that, then there'll be sanctions. And what we got was anything but that. And the bits and pieces that have been dribbling out are that Russia wants full control of one of the regions, which is Donetsk, where Ukraine has a series of fortified cities, and if it gives them up, or it gives that area up, it's going to be totally open to Russia coming back and having another go at it. So what it generally looks like is that President Trump has again adopted a lot of Russia's talking points, a lot of Vladimir Putin's talking points, and is sort of back to blaming the victim in demanding that Ukraine come through now and sign an agreement. And I mean, it's good to see these European leaders who are going to travel with President Zelenskiy to Washington, but Vladimir Putin has what he wants here. It looks like there's going to be a cleavage between the US and Europe, and either the war will go on or Putin will get what he wants, which is not ideal, really, from the Western perspective.
Yeah, as you mentioned, European leaders will be backing President Zelensky in that meeting with President Trump, especially after what happened in February with that shouting match, right? I mean, how much is at stake here for the Europeans as well?
Yeah, well, I mean, Shery, it's huge, because what happens in Ukraine then, in terms of what's agreed with security there and the US guarantees most importantly, then we'll reflect on Europe's own security. And so, I mean, obviously you refer back to that meeting Zelensky had with Trump, which was a disaster, basically. I mean, it looked like an ambush. There's been lots of reports various ways, but I mean, certainly Zelensky himself's going to have to handle himself better, but you can only hope that Trump will do so as well. But yeah, there's a lot on the line for Europe. I mean, if this land is given away to Russia, if, say, Donetsk is given to Russia, all it does is it emboldens it. I mean, it means that if you've got the might, you've got the right. And you know, Europe can't handle that. That's not how it operates. That's not how NATO operates. That said, this security agreement that Mr. Witkoff referred to, you know, the Article 5 NATO-like agreement for Ukraine, that could be very, very important. We have to know the details. As you mentioned, there's very, very scant detail on what's available here. So until we have the detail on that, it's really, really hard to assess, you know, how much is being a giveaway, but the portents aren't particularly good.
Yet Trump has seemed keen to want to tout progress on this. At the same time, we're hearing how, because of that backdrop, there might not be a need to raise tariffs on China over Russian oil. I mean, what is the calculus or the latest that we're hearing on that front?
Yeah, I mean, look, it's unusual, isn't it? I mean, we had the red carpet go out in Alaska on US territory to Russia's president, who is basically wanted for war crimes. I mean, the symbolism is quite extraordinary, really. But what President Trump was saying, his reasoning for not demanding a ceasefire for Putin is they had such a great agreement that they can move straight to peace negotiations. Now, that's always been the Russian view, that you have peace negotiations, you can drag them out, and you can take more territory. So Trump has sort of walked into that. But in making that call, he's then sort of walked away from secondary sanctions. And so it doesn't look like they'll be imposing them on Chinese purchases of Russian oil. There was nothing mentioned on India, where they have already imposed those. But with China, it looks like they won't do that. And there's two calculations there. One is that, you know, the US and China are still trying to negotiate a trade agreement, and to then throw that in on, you know, those secondary sanctions in on Russian oil probably, you know, is a big rock in the pond and makes things quite difficult to keep those negotiations going. So it's an excuse really to be able to avoid doing that and disrupting those China negotiations. But it really is a sop to President Vladimir Putin. I mean, there was a lot of tough talking and very little has come out in that front.
Well, there's Michael Heath there with the latest on those conversations around Ukraine. Now, China's Foreign Minister Wang Yi is also in India on Monday. Beijing is stepping up efforts to ease long-standing tensions. His visit comes with the Modi government's ties with the U.S. fraying. Let's bring in our China correspondent, Min Lo. And Min, really, President Trump's tariffs having made strange bedfellows of India and China at this point.
That's right. The timing is pretty strategic there, given that India is seeking to continue trade talks with the U.S. and the planned talks that were supposed to happen next week, according to local media reports, are going to be rescheduled. And certainly also interesting, given the latest context that Trump comments so far about holding off tariffs on China. Does it mean that the U.S. will similarly lower tariffs on India as well, especially the 25% tariffs it has imposed on Indian goods to punish it for buying Russian oil? But certainly the additional tariffs from Trump has made it more urgent for India to look for other export markets. And we have been seeing this gradual thaw in relations between China and India, starting from late last year after Modi and Xi met at the sidelines of the BRICS summit in Russia.
What is on Wang Yi's agenda these few days while he's there?
Yes, Wang Yi will be meeting with several senior officials, including the External Affairs Minister, the National Security Advisor. He's also going to be meeting with Prime Minister Modi tomorrow. And this is coming ahead of Modi's planned trip to China later this month to attend the Shanghai Cooperation Organization Summit. Now, this trip is meant to discuss the de-escalation of tensions at the border, the disputed border between the two sides. We understand from sources that China and India may want to announce a reduction addition of troops along both sides of the border. There are estimated 50 to 60,000 troops on each side now. Any reduction would be quite significant, really signaling this restoration of trust between the two sides. Both sides also potentially looking to resume trade at the border of local products. There are 3 trading posts along this disputed border that has been closed since COVID, coinciding with the deterioration of ties after the deadly clash at the border in 2020. So they're looking to resume trade. This is coming as both sides had announced that they are going to start resuming or work towards resuming direct flights between the two countries as well. India had recently started issuing Chinese visas to tourist visas to Chinese nationals as well. So really a broader sort of recovery of relations amid that trade tension with the U.S.
And investors will want to take advantage of the thawing relationship between China and India. What are we expecting to be the winners and losers?
Well, the biggest beneficiaries, the most immediate ones would be, for example, the airline and tourism industry. We already see those airline stocks gaining recently after announcement that both sides are looking to resume direct flights. But also when it comes to the electronics, pharmaceutical companies that import a lot of critical ingredients, key parts from China, they could benefit as well. Chemical and fertilizer companies are benefiting from the loosening of export controls on urea from China. But at the same time, we have been seeing this sort of quiet resurgence of interest from Indian tycoons to partner with Chinese companies from the likes of Adani, JSW. They've been quietly doing so to avoid scrutiny given China's resistance to tech transfers to India. But if we see a sort of spring awakening in US-India ties, we could start to see a resurgence in deal-making between Chinese and Indian companies as well.
Min Min, thank you. Bloomberg's China correspondent Min Min Lo for us. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how Europe futures are faring after that Trump-Putin meeting. The focus now shifts to a Trump-Zelenskiy meeting with European leaders set to be in attendance as well. Seeing some upside on some of these stock futures. The euro also a bit firmer against the greenback. This is Bloomberg. We have some data crossing the terminal out of the Lion City for you as well. Singapore trade data. Of course, this is an incredibly export-reliant economy, and we're seeing that based on the July non-oil domestic exports versus an analyst estimate of 1% fall, they've actually fallen 4.6%. So a bit worse than expected. We'll try to unpack that for you. That said, electronics exports, they've risen 2.8%. That is, of course, the on-year figure. We're not really seeing that move play out in the Sing dollar. Quite flat against the greenback at the moment, Shery.
And if you take a look at the commodity space, so we are seeing a little bit more movement. We are seeing pressure for Brent crude prices at the moment, and this as oil continues to fall. Of course, we're watching the President Zelenskyy meeting in Washington, D.C. We had also heard after the meeting with President Trump and President Putin that President Trump saying that he will hold off on tariffs on Chinese goods for buying Russian oil. So we'll continue to watch those geopolitical developments, as we're also watching iron ore prices in Singapore gained ground in the last session, and this to do really with the Chinese economy. We saw some eco data last week showing already weakness in the July factory numbers. Retail sales disappointing this week. We are watching for those loan prime rates to come out later on Wednesday. Also in Australia, of course, some big names in the resources sector reporting results this week, including the world's biggest mining company, BHP. Bloomberg's Paul Allen is here with a look at what to expect. So, Paul, BHP forecasts to cut its dividend. What's going on?
Yeah, we are expecting to see that dividend cut from 74 cents to 50 cents. EBIT's still looking pretty strong from BHP. That's forecast to come in at $26.3 billion. You mentioned the iron ore price there. It's held up pretty well over the course of the year, averaging about $97. And iron ore production's been really strong as well. BHP noting a record iron ore production in its last set of production numbers. Metallurgical coal's been a little bit softer in terms of results there. That's partly due to asset sales, though, but a real star for BHP has been copper. And we saw the Escondida mine, that giant mine in Chile, having its highest production in 17 years. And BHP sees copper prices holding up pretty well as this renewable energy story continues to roll on. Now, what's really going to be watched here is costs and capex. BHP's big Jansen potash mine has seen costs grow a little. The original forecast from $5.7 billion, now standing at $7 billion. This is just for stage one of the project, and there's a lot going on in terms of capex for BHP. Like 10 projects going to be delivered over the next 5 to 6 years.
Paul, what about what we're expecting to see from relatively weak energy prices and how that might play out in earnings of names such as Woodside or Santos?
Yeah, it is true that energy prices have slipped, but there's been something interesting going on with those two big oil and gas producers here in Australia. Woodside's first half sales likely to have increased on very strong production, and that's likely to push revenue higher as well. So that's seen climbing to about 10%. To about $6.6 billion on year. And if you take a look at Woodside's share price, right now it's parked above where it was when the oil price spiked back in June. That's when Iran started suffering bombardment from Israel. It's the same sort of story for Santos as well, that share price higher than it was back in that period where we saw a spike to oil prices as well. In terms of Santos, though, one thing we're going to be watching really closely for is any update on this takeover bid from ADNOC. The due diligence period has been extended a little bit to August the 22nd, so we'll be watching closely for any news on that bid.
Paul, thanks for unpacking that preview for us, Bloomberg's Paul Allen. Now, also in Australia, space startup Gilmour Space is looking ahead to its next rocket test after a failed first attempt to reach orbit with an Australian-made vehicle. Its Iris rocket flew for only 14 seconds before crashing during the July 31st launch, which had already faced months of delays. Nevertheless, the company says it learned a tremendous amount from the test as it develops its next rocket, adding that space is hard. Joining us now is the company's co-founder and CEO, Adam Gilmour. Adam, great to have you in the Singapore studio with us. Thanks so much for coming in.
Great to be here, everyone.
So we've just been talking about that 14-second in space, that flight. Talk us through some of the challenges, though, because you guys see it as a sort of success, right? Space is hard, as you say.
Well, if you look at like all the rocket companies that have gone ahead of us and been successful, every single one of them has failed in the first flight. And so what we've always told investors is don't expect us to get to orbit because it's really, really hard. And we're right in the middle of the pack in terms of flight time. So we're just under SpaceX's first flight attempt flight time. We have 400 sensors on the rocket, and when we get any kind of flight time, we learn about what's working, what isn't working, and then amazing things have to work to even get 14 seconds of flight time. And what we had is some engines out on the rocket, and you saw the rocket staying vertical, and that really proved out our guidance, navigation, and control system as an example.
So how are you taking that into progress and building out the next vehicle?
Well, our factory is in the Gold Coast, and we've been building the second orbital rocket already, and we've kind of kept it probably at a three-quarter built stage so we can learn as much as we can from the first flight. And in the next 6 months, we'll finish that build and go for our next test flight.
Adam, you talked about your investors and how you've been telling them that this is an incredible hard endeavor. What have they been telling you after this successful launch of 14 seconds? And do you expect to see more capital going into your company?
Yeah, they were very happy with the flight. You know, some of our major investors texted me within the minutes after the flight. You know, we did an investor roadshow in Australia last week. We went to Sydney and Melbourne. We met a lot of our current investors that we've been talking to for a while, and all of them were really, really positive. And it looks like we can raise a decent amount of capital, and I'm very happy with the response so far.
You're right now currently trying to raise more capital, and what could be the timeline for you to get another infusion?
Yeah, we're in the middle of a capital raise now, so we're in Singapore visiting a lot of big investors up here. We're trying to close the round sometime in late September or through October, and it looks pretty good. We're in what I'd call the final stages of getting up the initial interest.
Could you share a bit more on some of the names that you're in talks with for more investor financing or funding for your program?
Well, in Australia, there's sovereign wealth funds that we're talking to, a lot of superannuation funds. We're well backed by venture capital. In Singapore, we're having talks with both, Singapore-based capital managers, but also international big fund managers that have their Asia head offices in Singapore. And so we're talking to them today and tomorrow.
What about what's next for the company? I mean, you talked about how there's some progress on building out the next vehicle. What about heavier payloads? What sort of goals are you setting for the company here?
Yeah, we want to get to orbit first. We want to get regular cadence. The customers are screaming out they want a regular flight to space, almost no matter what payload we can take to space. We do have plans on bigger vehicles, but the lesson we've learned from other rocket companies that have gone ahead of us and failed is don't try to get too big too quick, and just get something that works, minimum viable product, and just get it built and launched regularly.
The Australian Space Agency, of course, is a big backer. They put in, more than $3 million announced just in July. How does this change the game for the Australian space industry?
Well, we're seen as probably the pillar of the Australian space industry because we have satellites. We have satellite in space. We've got our own launch site, and we've got an orbital vehicle. And so I think the Australian government was very happy that we kind of had our first attempt. It is well understood that's a big milestone on the road to orbit. We've got a lot of support from the federal government. There's a new minister that's in charge of industry that's de facto the space minister. And he's made press releases about us 3 times in the last month. So, I'm looking forward to working more closely with, my civilian government and also the Defence Department.
Do you expect more cash infusions?
We want to win contracts now. We don't really want to win grants. We've got technology that we're proving. I've got a satellite that works in space. So we're looking for more business from the government now instead of just grants and things like that.
You also had some recent board additions. How is that helping with the build-out of the company?
Well, one of my earliest investors was, my old boss when I was at Citibank, Paco Ibarra, and he was the number 2 at Citibank before he retired. And he knows a lot of investors, which is pretty handy at the moment. He's also got a lot of corporate experience with, all kinds of companies, including aerospace. And then we've put an advisor on the board that's a just retired 3-star general that was in charge of Space and Cyber Command before he retired. And so we think these 2 appointments give us a lot more bandwidth to talk to both governments and defence and investors.
All right, Adam, thank you so much for coming in, talking us through your plans, a key part of Australia's aerospace ambitions. Adam Gilmour is CEO at Gilmour Space. We'll have more ahead on the Asia trade. This is Bloomberg.
We have more big tech earnings in China this week, with Xiaomi set to report tomorrow. Baidu will be another key name to watch as it struggles to monetize its AI efforts. Let's get more with our Asia tech correspondent Annabelle Drewlers in Hong Kong. Belle, a very busy week for you, and we start with Baidu perhaps this time. What's expected?
Yeah, Baidu is going to be one that's going to be closely tracked because this is a company that was once the early frontrunner in the AI race in China, but now has really been facing a lot of struggles and hurdles toward monetizing its AI efforts. And so that is going to be really the key focus to watch. Bloomberg intelligence team, for instance, says that the company's outlook does remain highly challenged. They're expecting another set of weak results from the company as well. Continued lack of top and bottom line traction again. The AI prospects, I mean, this is again going back to the views of Bloomberg Intelligence, but they basically say that they're overhyped. So that's the story with Baidu. In the AI space as well, Kuaishou's results will be interesting to watch, given that there's been a lot of different hype around its Kling AI tool. That does continue to be in focus, though we have seen shares under pressure, given the company as well has been making a foray into the food delivery business, and we know how competitive that is in China as well. Bilibili is another name to watch. It should be posting a 20% rise in quarterly revenue on a continued increase in its active user base and advertising sales as well. Just to note, in the last hour, we did mention about Alibaba results that are due. Actually, the company hasn't set a date for those just yet. We will, of course, be very closely watching for it, given that Alibaba, like JD.com, does face a lot of competition in that e-commerce business in particular, but food delivery as well. But just to note, Alibaba hasn't actually scheduled its earnings results just yet.
Mel, what about the story with Xiaomi that's also set to report? I mean, how are you going to be gleaning from what it says about EVs, for example?
Yeah, EVs are going to be really the main kind of segment to watch very closely, but we can get to the other two business arms as well, because there's EVs, but there's also IoT, or Internet of Things, so they're the home appliances, devices essentially, plus you have the smartphones. So smartphones, actually, a Bloomberg intelligence team is saying that you could see mid-single-digit growth in that segment. IoT actually could do a lot better because you're continuing to see those trade-ins, those subsidy programs as well in China. So that could be a real standout. But the EVs, as you said, will be very closely watched, given that we're continuing to see more and more growth in this business line in particular. Has really been ramping up over the last year. Now it's that question, as you continue to have those sorts of economies of scale that start to build, how much can that continue to contribute not just to the bottom line, but also improvements to the gross margin? Our Bloomberg intelligence team is saying that could have improved to 22.5%, but broadly they're expecting revenue to have jumped 30% on the year.
Annabelle Jonas for us there. Now, the other EV name that we've been tracking is Leapmotor. That was once a fringe player in China's EV industry, but its Hong Kong-listed shares have doubled since January, leaving better-known peers such as XPeng and Xiaomi in the dust. Our Asia transport reporter Linda Liu joins us from Hong Kong. So, Linda, talk to us through what we've been seeing in this so-called fringe player. How did it get here, and what are its prospects?
Good morning. Leapmotor has been an underdog, actually, for most of its early years because its sales weren't really doing so well compared to some of its peers. But now with China's economy experiencing a slowdown and a weak consumer sentiment, Leapmotor's really affordable mass market offerings are actually helping it to win out in China's very competitive EV market. Their family-size SUVs are really good value of money, and we're just really seeing their sales skyrocket in the past year or so.
Not just the sales, but the stock prices, you can see right there, skyrocketing, 200% in the past year. But of course, that's a whole different story from being able to scale their business, right? So what will it take for this company to actually be long-term profitable?
Yes, so they've recently added more production lines to really help fulfill that demand. And they're also making plans to expand internationally because the margins are just being eroded so much by China's EV price war. They're hoping that by going overseas, they can recuperate some of the profitability and margins overseas. So they've signed a deal with Stellantis to create this joint venture where they can leverage Stellantis's resources, so for example, factories in Europe, to manufacture some of Leapmotor's models and really just take it internationally. So hopefully with domestic production ramp up as well as this global joint venture, Leapmotor can really help boost its brand.
Linda, what stood out to you from how it's gotten ahead, as you mentioned, is how affordable its vehicles are. But this is coming against the backdrop of Chinese authorities cracking down on these price wars. Do you see it as a sort of headwind for Leapmotor, or is it relatively insulated from it, given how small a player it still is?
That's definitely something we're watching really closely is how much the government scrutiny is going to affect the pricing strategies of the EV makers, including Leapmotor. Leapmotor has always said they've managed to keep costs so low as by making a lot of the electrical components in the car in-house. Their founder and CEO Zhu Jiangming has a very strong background in electronics. So hopefully Leapmotor will be able to keep offering these very affordable prices, but at the same time address regulatory concerns.
Bloomberg's in the loop there with the latest on Leapmotor. And of course, over in China, another sector that we're watching very closely is robotics. Machines made by Unitree Robotics have grabbed the spotlight at the World Humanoid Robot Games in China. The company's H1 robot won gold in a 1,500-meter race with a listed time of 6 minutes and 35 seconds. The three-day event hosted in Beijing was the latest showcase for China's challengers to Tesla and other U.S. companies in the emerging field of advanced robotics. Actually, you can get more on these humanoid robots with Bloomberg Tech Asia. We return this weekend, so do join me and Annabelle at 8:30 a.m. Hong Kong time on Friday on Bloomberg Television. Subscribers can also watch on Terminal using our TV Go function. We have more ahead on the Asia trade. This is Bloomberg.
The latest on the corporate front, Air Canada says flights will resume on Monday evening after its flight attendants union defied an order to end the strike by Sunday. The airline cancelled about 240 flights and says the walkout could disrupt 130,000 passengers daily at the peak of summer travel. The union, representing more than 10,000 attendants, is challenging the Labour Board's back-to-work order, calling it unconstitutional. The Airbus A320 series is poised to overtake the Boeing 737 as the most delivered commercial airliner in history. Aviation consultancy Cirium says Airbus had narrowed the gap earlier this month to just 20 units with 12,155 deliveries in total. CEO Guillaume Faury says Airbus may launch a successor to the A320 by the end of this decade. Reuters reports that Klook is working with Goldman Sachs, Morgan Stanley and JP Morgan on a potential New York listing. This confirms earlier Bloomberg reports that the SoftBank-backed travel booking firm is exploring a U.S. IPO that could raise up to $500 million. Klook, founded in 2014, reached unicorn status in 2018 and turned profitable in 2023. It competes with Bookings.com and China's Trip.com. And Bloomberg has learned the Trump administration is weighing using funds from the U.S. CHIPS Act to take a stake in Intel. It's unclear if this would involve converting Intel's existing CHIPS Act grants into equity. Any deal would bolster Intel's finances as the company works through a turnaround. Discussion of a government stake in Intel kicked off a rally in the stock towards the end of last week, Shery.
And Avril, take a look at how benchmarks are trading across Asia right now. It's a little bit of a mixed picture. You can see the Nikkei extending those gains after reaching record highs already last week. When it comes to the broader MSCI Asia-Pacific region, you have healthcare, industrial sectors gaining ground, but financials and information technology stocks losing ground. You can see the Kospi down 0.9%. Of course, we had a little bit of eco data to digest. Non-oil domestic exports coming from Singapore, surprising to the downside. Contraction of 4.6% year on year after we saw the previous number actually seeing a gain of more than 13%. Of course, Singapore, a very open economy. Its Prime Minister Lawrence Wong has just come out saying that jobs for citizens will be the government's top priority as the city-state faces risks from rising global trade barriers and artificial intelligence. Of course, we continue to watch those trade negotiations ongoing at the moment, and President Trump's tariffs on India about 50%. 1%. We'll be watching that closely as a geopolitical backdrop is another one to watch with the ongoing negotiations around a truce for Ukraine. President Zelenskiy meeting with President Trump on Monday after President Trump already met with President Putin. He said that he'll urge Zelenskiy to make a quick deal. Take a look at how futures are looking. Of course, we're following China's economic data. We had seen some of that coming from last week. Across the board weakness in July with factory activity, retail sales disappointing. But that, on the other hand, is leading to more optimism that perhaps we could see more stimulus coming from China. So we actually saw stocks extending gains, although you can see A50 futures having closed to the downside of 0.2%. U.S. futures gaining ground, rebounding after stocks fell from record highs last week. And really, Avril, it was also another picture of mixed data from the U.S. But of course, we'll be watching Jackson Hole this week for whatever Chair Powell has to say.
Yeah, and we're seeing the extent in which that's sort of playing out, right? The global demand backdrop for commodities, given the weak China data, maybe that is pushing some pressure on commodities, even as we watch out for that meeting between Trump and Zelenskiy to come. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.